Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. So it is it looks like it's Wednesday, and we've recovered a little bit since since yesterday, but here we are, and so it's let's get into it with some of what's going on. So basically, the market is still in a confirmed uptrend, which is good. The Nasdaq moved up a little bit today, which is great. It was a bit of a it was a bit of a move back, which was great, and it looks like we're maybe back on track, up 1.6% at 170, up 185. Basically, just wanted to show you the S&P. We pulled a little bit. We were down yesterday. We pulled back up. We seem to be kind of, flirting with that 360 level. The important level on the spider is 360. So, that level is extremely important when it comes to, the general direction. So as long as we can get to that 360 level, I think that, we're likely to see, to see it move up a little bit more. So, that's an excellent thing that's going on. There was a huge shakeout yesterday, and I was shaken out of a number of positions. Here's the thing. Be careful jumping back into the market right now, because there was a shakeout, and we're still pretty unstable. We're still in a confirmed uptrend, though, which is a good thing. So we're still in a confirmed uptrend, but it's just looking. It's not. I'd like to see it. I'd like to see it a little bit. I'd like to see it a little bit more robust than we are currently. So just that going forward. So we want to be kind of careful on how we go back into the market. So don't just jump back in to the market. We need to kind of be real careful in terms of if how we're doing it on that. So so we want to be very careful going back into the market. I just want to show you the QQQ. Of course, this is where all of the sort of the big name techs live. This is the 100 largest stocks that that are in the Nasdaq, and this is where the Microsofts and all that kind of stuff. That we've pulled back up, which is good. The key level on this, we're still above the key level, which is 275, and we're at 289.90. So definitely, a welcome sign to see it pull back and move higher today. So that's a great thing. Now where all the action has been, because we've been in essentially a rotation, and what a rotation is it's where stocks move from sort of the one area of the market to the other area of the market. The area that they've been moving from is the big cap growth stocks, the Microsofts, those kind of stocks, to some of the Dow stocks, and that's where I've been seeing a lot of movement too as well. So that's the kind of thing that we want to be careful about. When there's a rotation, it's really strange. Your tech stocks can fall, but the overall market doesn't fall that much, and that's exactly what happened yesterday. So hopefully we're going to get a little bit of rebalance on that, and it'll come back to where that is not as much of a situation. Just wanted to kind of give you an idea of where I am holding currently in the market. I have Cloudflare, and it's coming into earnings. Basically, I think in 2 days. So, but it's up significantly since when I bought it. This was on the Action Trade Alerts, by the way. And if you're interested in getting access to the Action Trade Alerts, it's super easy to do. All you have to do is to go to the website, www.dallastradingfloor.com, and just sign up for the Action Trade Alerts. It's super easy to do. But anyways, wanted to go down the list of what I'm currently holding. I've also got GBDC, which is the Greystone Bitcoin Trust. I'm also in FormFactor. That's done very well. ResMed, IMFI, which was there was a buyout on IMFI by Marvell Technologies, and then I'm also in Palantir. So that's kind of where I've been. That's kind of where I've been in the market currently. So without further ado, let's kind of move over to some of the. There we go. There. Okay. Okay. So let's let's kind of get going on the other stuff, and I hope that everyone has had a pretty good week. And let's start with some of the questions. So here we go. Let me pull this up here. Okay, great. So what about, hello, hey. Hello, thank you very much. Babek says that, so we'll go to the next one here. Thoughts on, this is a question from Dinesh. Thoughts on BTG. So let's go over and take a look at BTG really quickly here to see if we've got anything that's actionable. Let's see, BTG. There we go. All right, B2 Gold. This is one that I had recommended before. Unfortunately, it's sort of fallen off a cliff, and this is always the danger in relatively lower price stocks. It is top rated still, but it has a relative strength of 89. But unfortunately, if you've made any money in this one, probably time to exit. It did have a very good earnings per share. Were up, basically about 88 cents. But like many things, after it goes through earnings, that's when it heads lower. So that's sort of unfortunate that happened there. So basically, let's take a look at some of the other criteria. It's still got a 7 out of 9, which is good. The funds are basically strong in there as well. Here's the thing about BTG, B2 Gold. If I were in this and I had a little bit of profit, I would sell it. The buy point on this one, on a consolidation basis, 575, and you're at 592. And unfortunately, we have a downward trending chart. We may reverse on this one, but it looks like it's downward trending. So I wouldn't add to it at this point. If I had it, I would hold on to it because I do think there may be a reversal possibly within the week. So we may see a reversal higher. But right now, I wouldn't add to this position at all. Unfortunately, it's a good stock. It's just that it needs to start in ascension to see any more of that. So let's take a look at the TikTok. All right. So wow, we got a lot of people joining. That's great. Let's see. What's the buy point for PFE? So let's look at PFE. And let's see if I can give you any information on that at all. Yeah, Pfizer. Okay, wow. Okay, Pfizer's pulled back a little bit today. Not surprising. Usually when there's a big announcement, it'll gap up, and then that's definitely what happened. There was a pullback on it. It's currently trading at 38.34, which is quite good. Now, of course, the PFE, they announced that they do have a vaccine for the coronavirus, so that's pretty exciting. In terms of the stock, it did move up significantly after that. It's pulled back a little bit. I do think it may be setting up right now. It's above the 200-day and the 21-day and the 40. So we're looking pretty good on that. But we've pulled back. So let's see if we can buy this thing. The checklist, unfortunately, on this one is only 55, 5 out of 9. I typically like to see 6 out of 9. In order for it to be a buy, but that's kind of the situation there. We do have not increasing fund ownership, but we have very strong fund ownership on it. Here's the thing: this is a big cap pharma, and I would watch this one right now. The buy point on this one off of flat base is 39.45. So let me put that out there on the chat. The PFE buy point is equal to 39.45. So we're a little bit below that at 38.34. But this is something that I do think that you can buy this at this point. Now, here's the thing: there's certain caveats on it. I wouldn't go in with a full position on this one, but this one might not be a bad one because basically what we're sitting here with is the biggest problem here is the relative strength at 46. But remember, the relative strength is for the entire year. And that's a very, very important thing to note. The relative strength is for the entire year. So many times we cannot get relative strength on something that has changed course like this one has. So I'm fairly confident in this buy point. of going in basically a buy point on at 39.45. But don't go in with a full position. Go in with a half position. Now, what do I mean by full position? A full position, if you took your portfolio and divide it by 8, that would give you 8 full positions. And a half position is basically half of that, or a 16th of your total portfolio. So if, for instance, you had a $100,000 portfolio, let's just say you'd have that, your full position would be $12,500. A half position would be half of that, or $6,250. So if you have a $100,000 portfolio and you're looking to add Pfizer, I would recommend going only in with a half, only with a half position on that. And I think that's the way to go. Now, the buy point is on this one is 39.45. So we're just slightly below that. Now, if it moves above that buy point, it's pretty likely that it's going to continue higher and kind of settle at that level and then possibly go up. What buy points are is that stocks don't go up straight or straight down. They sort of have these little resting places. And one of this, and that's really what they call a that's what they call a pivot point. So this pivot point, or the buy point, is about 39.45 for Pfizer. So that would be, possibly a really good one to go into because of this coronavirus thing. I think that's going to be very, very bullish for the stock long term. Right now, of course, it isn't quite as robust based on that, just because of the fact that it for the year it's been underperforming relative to some of the tech stocks. But there's a rotation out of the tech stocks, which are in the NASDAQ 100, into many of these many of these larger pharma and other kind of stocks. Now we have a question on St. Joseph Company. Symbol on that is JOE, St. Joe Company. And at one time, and I don't know if it's still true, this is the company that had the most raw land in the state of Florida, interestingly enough. Many years ago, Walt Disney, when he was forming the Walt Disney Company for Walt Disney World, went to the St. Joseph Company, and he tried to buy land from them, and guess what they told him? And this is the funniest thing, I just happen to remember this, is that we don't deal with circus people. Can you believe that? Well, anyways, the Walt Disney Company, of course, is many times more valuable than the St. Joe Company to this day. But whatever, Now, so basically what's happened is it's pulled back a little bit. It's right about $30.27. Now, where could you buy this thing? It's got a relative strength of 93. It seems to be weakening a little bit, but I do believe it's possible to buy. I think the buy point on this one is 28.01. And that's basically for a pullback to the, 21-day, to the 21-day exponential average. So I'm going to put that out there. The buy point on the JOE, this is St. Joseph Company, JOE, is equal to, let me see, we give an exact number here. Well, it's not, this is on the 21-day, so I would 28.05, 28.05, and that's the that's the 21-day line. Okay, so that's the secondary buy point. That's not a primary buy point on that one. I just put that out there in the chat. So let's take a look at, and it looks pretty good. I mean, St. Joseph Company here looks, it looks fairly good. I mean, it's 100% checklist. And, ownership. So that's all looking good. I don't know. This one looks, this one looks very, very good. Overall this one looks, very, very good. So, let's, So, yeah, so overall this one, does look, very, very good. So, we could maybe rig the register on that one. Who knows? Who knows what we could do on that? But that is looking pretty strong there. All right, so let's see. I want to invest in the healthcare sector. This is what Mohammed Ali Khan says. I want to invest in the healthcare sector. Would you recommend ARKG or a better option? Well, let's look at ARKG. Okay. ARKG. I think that, for the healthcare sector, we might want to have selected one. ARKG. Let's see. Let's see if I can give you something. Yeah, there we go. ARC Genomic Revolution. This is interesting. This isn't really healthcare. I just want to be, I just want to be upfront about this. This is really more like a CRISPR, CRISPR technology kind of. That's the kind of things that would be in this one. But I like ARC stocks. I mean, I have to say this one is not a bad one. Let's look at this ARC. It's got a relative strength of 95. That's excellent. And this is definitely something that I really like. 77% on the checklist. That's great. Ownership, excellent. Yeah, I mean, I could definitely on ARKG, I definitely could give a thumbs up on this one. I definitely can give a thumbs up on this one. This looks very strong, and looks like something that might work really, really well. I mean, it might work really, really well for you. So, I don't know. I don't know. Could we ring the bell on that one? I don't know. I don't know. I don't know how that one is. But I think it's pretty good. I think it's pretty decent on there. So let's go to the next one as well. Okay. Is the rotation over? Should I move into tech? I don't think the rotation is necessarily over. I still think that we could still see some movement out of some of the big techs. But let's take a look at at one of the big techs that that I kind of like, of course, and that's Microsoft. I think everyone likes it. I mean, that's not. I mean, I think if you're going to move back in the tech, you got to be a little bit more careful than before because we are sort of the rotation says that there's been a lot of profit taking. What can we do here? If I'm moving into the big techs and I kind of want to be careful, just put my toe in the water. The way I would do it is I would look to see at some of the ones that are beating down big tech. Now this is already pushed up here to 1691. It pulled back to the 40-day line, and then of course, boom, it went right back up. I would recommend possibly. I think that you could probably safely, put a few shares of Microsoft into your portfolio. There was a direct movement on the relative strength. It went up 74 on that, so that's looking very good actually. In terms of in terms of where that is, I'm liking that very, very much. So if I were going to go, kind of rebuild my positions here, I would look at possibly going back into a big cap like Microsoft, rather than Apple and rather than the other ones. I think that Microsoft is probably going to give you a superior, is going to be superior. So that's where I would recommend going first. Now, time will tell. I mean, it's one day doesn't make anything, but I do see some weakness coming. And but right now, one of the things that I like about Microsoft, it snapped right back, and we saw some very, very nice, very, 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 very nice movement in it. So also another one I look in the tech sector, and again, as if everybody knows that I'm more of a tech centric guy. I like TSM a lot. That's Taiwan Semiconductor Manufacturing. A lot of people know that one. It's pulled up a little bit today. I think you could add to this one or possibly start a new position. I wouldn't go in huge on this one, but one of the things I will say about this, and I want to show you the checklist on this, it's pretty darn good. We have a checklist here of 100%, or basically 9 out of 9. So that's pretty excellent when it comes to when it comes to the checklist here. That's the kind of numbers that we definitely like to see. So that's another one. If you wanted to go back into tech right now, this one also has a relative strength of 91. So I think that if you want to go back into tech, that might be a place that you could easily go back in. I do think it's going to continue to be strong as well. Got a question on Sorrento Therapeutics, SRNE. This is one I had on the watch list, SRNE. I am currently out of this one, but this is maybe showing a little bit of life. I want to show you this chart, a little bit of a scary chart on this one, because we do have a downward trending. We are downward trending at this point. So this is probably not the best entry point for it. So there we go, and I'm going to show you that. So we have this sort of a downward trend. Even though we've pulled back, we may see a reversal on that. We still have a relative strength of 96. Now, one thing I want to be very clear on, the relative strength of 96, this is relative to the S&P 500. But remember, this is looking at an entire year. So if you look at this from where it started, we've outproduced, we're up in the 4% against, we're 96th percentile of the S&P 500. That's very, very good. But recently we've been pulling back. So could you get back into this one? Well, it's got a 6 out of 9. I like that. And the ownership on this is good. I mean, it is an increasing ownership situation, and it is an inexpensive stock at $6.55. Now, has it turned? I think it has, because it's bounced right off of the 200-day average. Now, would I put two full positions of this? Not on your life, but I do think that this is a possibility of a bounce off. I like bounces off of the 200-day moving average, because that does usually show some strength. So, and we did have a lot of buying activity here. So I like a lot of the things that are going on here. Let's look at the weekly chart to kind of see. Yeah, it pulled way below that 200-day, and it's moving back up. So this could easily move from 6 to 10 or 12 within a period of about 2 or 3 weeks. So I do like this one a lot. We have pulled back. Don't buy it right now, because it is continuing to pull back. Wait for a turn on this one. It's currently trading at 651. So you're going to have to watch this one a little bit. Wait until the relative strength turns up, and then you might have a winner here. But I kind of like this one as well. I'm not in it, but pretty good, pretty good. So interesting there. Okay, so Kaon K basically says, look at CMG, Palantir, and Joe. Everybody knows, I'm in Palantir. I've done fairly well, and it's coming into earnings, so I'm going to be setting up my stop losses fairly high tonight in case there's a snapback, which there may well be. But Palantir is let's get a chart on that one. Yeah, it's just continuing to move really well. 15.89 is the current price on Palantir. There we go. And let's look at the daily chart to see if we can have any kind of look-see for where to buy it. Oh yeah, no, it's pulled really nicely. It's got a relative strength of 95. That's excellent, but its earnings are in one day, so be very careful. If you've bought this a while back, I would consider possibly setting my stop loss about at the I think about the 1450 range, possibly 1435 range. But I'm going to definitely move my stop losses up on this one as well, because I do expect that we will have a little bit of a pullback, maybe to about 14 going through earnings. But this one has done extremely well, and I do expect that it probably will, hopefully, do well into earnings. But let's look at CMG and see if we have anything here. Chipotle, I have not been in Chipotle. Chipotle is quite an expensive stock, as you know. As you can see, it's currently trading at $13.0485. It's up $61. Can you believe that? That is incredible. That is incredible. I just don't know what's going on with Chipotle. Relative strength of 87. Let's look at the grind criteria. I would be afraid of buying it at this level. Yeah, this just isn't as good enough for me. 5 out of 9. I know that, I could be all wet on this one. I'm just a little afraid, with a stock like this. But it looks like it's in a range, in a consolidated range from about 1384 up to, right about 13 up to about 1384. So that seems to be the resistance on the on this. It seems about 1384. So it's 1302. So potentially it could move. It could move up another. It could easily move up another $80. It easily could do that. And it does look like it's trending like that. But I'd be a little bit careful with this one. I think that um, again, without the U.S. fully opened, I think that it does present some risk there. Some definite risk in terms of shares. So I'd be a little bit careful on that one. Talk about ACB. This is from TikTok, by the way. Thank you for watching me on TikTok. ACB. Let's take a look at ACB, and that's Aurora Cannabis. The cannabis stocks. I was talking with a colleague about this morning. The problem with cannabis stocks that I see is that it's just, yeah, I just think there's too much supply. I mean, yes, it's true with the Biden presidency, there might be legalization in the United States, but most of the cannabis stocks are Canadian companies that are listed on U.S. exchanges. So I can't really recommend this chart. It's a downward trending chart. I mean, let's look at the weekly chart here. But yeah, this is not a chart you want to buy. I mean, I know this is a lot of people are very interested in this area, of course, but I just can't buy a chart like that. I mean, if you look, this is the this is the trend on it. Just not the trend I want to look. Just not the trend I want to buy. And I'll show you this in just a second. Here we go. There we go. As you can see, the trend is very much downward. I mean, it did pull back, but it's 764. It's pulling back again. It's 217. Let's look at the Bragg criteria on this one. Checklist is 33. This is horrible. Ownership bad. I think you need to save your money on this one. I think it would be better to buy cannabis rather than to buy Aurora Cannabis. That's my opinion on it. I just don't think it's a good stock. Based on the chart, I think you're going to lose money if you buy that thing. Tesla and Apple, any suggestions? And this is also coming from TikTok. So let's take a look at the Tesla chart. TSLA, of course, is the symbol on Tesla. And Tesla has been kind of weird. It's pulling back today. It's down $13. If I want to show you this chart, I don't know if you can see this. Now, if you're looking on TikTok, obviously you can't see these charts. You can, I have a static background. Unfortunately, I don't have the. I actually have the charts on YouTube. Easy to jump over to YouTube. Super easy. Just go to www.DallasTradingFloor. I mean, youtube.com/DallasTradingFloor. And this is episode number 172. So you can see the charts on this. Talking about Tesla right now, the thing about Tesla is, we've had this tremendous run, but it seems to be in a basing pattern. Moving, the high typically is about 440 or 442, about that. And it seems like the low is right about 407. So it seems to be in that range. Right now, it's trading at 416.75, and it does still have a relative strength of 99, which is excellent. But remember, that relative strength is for the entire year period, not the period, not just the current month or week. So you got to take that into account. I think we may be seeing a little bit of a slowdown in terms of Tesla. A lot of people have bought into it. It still has an extremely strong checklist, 7 out of 9. And here's something that you might want to consider. And I was looking at this today, and because as everybody knows, I'm a Tesla bull, and I've done very well in Tesla this year. But I'm currently out. I've been looking kind of for alternative investments in this space that are kind of legacy investments, and I came to a very interesting conclusion. Something that really surprised me, because I was just trying to objectively put put information in there and see what happened. And I came up, and this will kind of surprise you. I came up with General Motors. Can you believe that? I came up with General Motors, and I want to show you this weekly trend, because this is not necessarily a bad trend. It is trending up. Okay, it's got a relative strength of 90. Relative strength of 90, if you can believe that. This is General Motors. So, I'm considering making some buys in General Motors. Now, how high can it go? Well, we don't know that, but let's look at the monthly chart to kind of look at the history. We're kind of getting to the point where we're almost at a high for General Motors. Now, remember, This is the reorganized General Motors, not the legacy General Motors. The legacy General Motors, of course, went bankrupt in 2013 and is bailed out, but they were able to get rid of a lot of their debt. So this actually might not be such a bad deal. If we can exceed its high, which is about 45, then I think that that we maybe do well. It's up $6.02 today. This is something that I'm becoming very, very interested in. And I and it, much to my surprise, because as I say, I'm not normally, I'm not normally a bull on things like General Motors, but I want to show you in the small portfolio, which by the way you can easily get in there. I want to show you General Motors and on that, and just kind of the buy points that I've come up with for that. And this is something that really surprised the heck out of me. But I did a lot of research, and I have a buy point on General Motors of about 31.12, and that is based on so it's extended. But here's the thing. I mean, it it is making money. Without the debt, General Motors actually looks fairly decent, and that's what so surprised me in this whole in this whole thing, was that it is doing fairly well when it comes to when it comes to that. So very odd thing, but it's something that you might want to look into. All right, so let's look at this next one. What is your plan with Palantir, and why are you selling before earnings? And okay, well, here's the thing. I lightened up my position on Palantir a little bit, and as you know, I've been in Palantir, and I've done fairly well. I've fairly well on it relative to the other ones, and I kind of wanted to show you where my position is on Palantir. And I'm gonna move back over to the small portfolio here that I have, and I'll show you kind of where I'm at. I have 1.5 positions basically in Palantir right now, and that's here. I can show you there. Currently, where I bought in, my average price for Palantir is 11.86. It's currently up about 34% in 6 days, so it's doing fairly well. What I'm going to do though is I'm a little bit afraid of the snapback, because currently it's at 15.85. What I'm going to do is I'm going to push my stop loss up significantly on this one, probably to about 15 or maybe 14.75. Normally higher than I would normally do this, to be honest with you. So that if it does snack back, it will sell me out. But then if the chart is right, I'll come right back in, because I do think that long term this one has legs. So, but I'm going to move up my stop loss. But as you can see, I'm not sold out yet. But I'm going to move up my stop loss to protect the gain. I just don't want to do a round trip on. I just won't want to do a round trip on this one if I can avoid it. I've done that so many times. But I do plan holding it through earnings, because I bought at $11.84. Now, had I bought higher, I would sell. And I had a secondary position in another portfolio that I did sell. I did sell at a profit, and what I did is I reduced my exposure. So that's kind of how I plan on doing Palantir. Okay, thoughts on Etsy? Thanks for this question. I like this Etsy. I like Etsy a lot as a company. It's done remarkable things this year. So let's take a kind of a look at it, see if we can chart it. ETSY is the symbol on that. I'm going to look at the weekly chart first. Here we go on the weekly. With the weekly chart, we still have a relative strength of 96, which is excellent, but this is trending down. So we are pulling back here at 130.59. We're back. We're down $15.86 today. Here's why we are here. Here's the reason for this. This is why, everybody, I like to sell before earnings. This happens all the time. Let's look at this. We had excellent sales growth. It wasn't quite as good as last quarter, but still excellent. It's 64% owned by funds. It's got excellent profits. Why would it pull back? Well, this is a classic example of buy on rumor, sell on news. I suspect that once this thing pulls back and this thing reverses, this is going to be a great buy. So I would recommend watch listing Etsy. But this is the danger in holding a stock through its earnings. Let's look at the daily to kind of show you this. And this is why I don't typically like to do this. As you can see, we had earnings there, and they were excellent earnings, but then we pulled back, and so we're coming back. So I don't know exactly what's going on here. We're up today, $11.16. So what I'm trying to say is that typically I will hold something into earnings, and then I will sell it, and then I will wait to see if there's a pullback and then buy it. This looks like that is rebounding from a pullback, and this looks, but I don't know exactly why it pulled so far below the 40-day moving average, but it definitely did. It's definitely buyable at this point. This is a classic reversal. Now, if you've held this, if you're coming into earnings, I recommend selling into earnings, then waiting to see what happens. If there's a pullback and a reversal, and that's definitely been the case here with Etsy, then you want to buy it, but you want to buy it only as it's moving upwards. Make sure that it's on the upward movement before you buy it. So can you buy it at this point? Well, if you aren't in it currently, I definitely think you can. 7 out of 9 on the criteria. That's excellent. We do have increasing fund ownership, and it's a great company. So I would recommend this one if you're not in it currently. This one might be a buy, because it looks like it's going to march right up this 40-day line. But what I always like to do typically is to sell or de-risk my position, hedge my position into earnings, because usually, no matter how good a stock is, a lot of times it will pull back. Let's take a look at Apple. And this is another question from Dodge This 11 from TikTok. So let's look at Apple. AAPL is the symbol for Apple. And there we go. Okay, so we have, if you're looking to get back into the big techs, this is up 80 cents today. Not a lot, 119. It's definitely within a trading range. Here's the thing about Apple. I like Apple. I like their products. Of course, I'm using Apple products right now, and I think they're all really excellent. But I think, in terms of profitability, I think you want to be. I think you're better off starting, if you're starting to fill out your position, with buying Microsoft first, because it is acting, the trend on Microsoft is a little bit better. I just wanted to show you. I shifted to the Microsoft chart. I think the Microsoft chart is a little bit better right now. I think it's a little bit easier to buy. It's off today currently, 216.55, but I do think that on a reversal, this one probably is the better of the two. So that's kind of my thought on Apple. It seems to be, kind of bouncing right off that 40-day line. Again, there's a major rotation out of big cap techs such as Facebook, Apple, Amazon. Those stocks. There's been a big rotation out of there. Okay, so let's take a look at TGXT. Let's look at TGXT right now. TGXT. And no, TGTX. I'm sorry, TGTX. TGTX. And that's TG Therapeutics. It's pulling back a little bit. $27.16 is the current price. We're down about 99 cents, so it's pulled right to the 40-day moving average. Now the question is, and it does have a relative strength of 97, so that's pretty excellent. Here's the cautionary tale on this. Be cautious on this one. We only have 5 out of the 9 on the buying criteria, so I wouldn't enter any new positions on this one based on this. And we do have increasing fund ownership. So for right now, if I was in the stock and I wasn't down more than 7%, I would stay in this, because we have an ascending. It's moving right up that 40-day line, which is looking very good. Would I add to this position? No, I wouldn't, Mr. Sid. I would not add to this position right now. I don't think it's right now ready to add to. Jim, do you have a day trade? Have you day traded in the past? And if so, what's the best strategy? You know what? I used to be a day trader, and I still do that from time to time, but I really don't day trade as much as I used to. And the reason is because the day trading universe has changed so much with the programming traders. You're basically trading against computer algos, and it's very hard to win as a day trader. So I am what they call a swing trader more than I'm looking for breakout stocks or stocks that are reversing. That's what I'm looking for. And then when I do that, I will move into them as they're moving higher, and then hold them usually until earnings, and then sell before earnings. So I am much more of a swing trader than I am a day trader. Just to be honest, it's getting increasingly difficult to make money as a day trader because of the algos. So that's kind of the situation. All right, we have a question here from Katrina Gonzalez, XPENG. I don't know what that is. So let's see if I could figure that up. XPENG, is that right? I don't see that, unfortunately. I don't see that one coming up. So, unfortunately, I can't tell you anything about that one. I apologize. Starbucks. SBUX, the big Starbucks. Let's look at Starbucks. In this one, as the economy reopens, this one may turn out to be very good because, of course, everyone, loved Starbucks before, and maybe they'll love it again. So let's look at the chart. All right, well, it looks as if we have pulled higher. It's up $1.12 today, which is pretty excellent. That's on the daily chart. Let's look at the weekly chart. When you're looking at a stock to buy, start with the weekly chart to see general trend, and this definitely has good general trend. It is moving very nicely up. So that is a good thing, and it seems to be following the 21-day moving average. Now, can we buy this thing? Well, the checklist is not very good. It's only 5 out of 9, and we do have increasing fund ownership, which we do barely. The one thing that concerns me is a relatively low relative strength at 75. 80 is my minimum. Here's what I would do with Starbucks. This is not probably one I would buy, even though it's up $4.39 today. I would not buy this one today, but I would watch this because I do think that it may come into a very good time. Now, here are some issues. There's some red flags with Starbucks, and I want to point them out. One of the things that's very important in a company like Starbucks is sales growth. As long as everything is growing, everything's looking good. But unfortunately, we have been shrinking. Starbucks has actually been closing locations. And a lot of this is due to COVID. But so I think that you want to watch this one. I don't think you want to buy this one right now. I don't think it's time yet for this one. They've got fabulous management, and they've got great products, but unfortunately, they're not faring as well as McDonald's is during this COVID thing. So if I was looking in the restaurant group, which I'm definitely not, because this is a very weak group, I would be looking probably at Brinker International. The symbol on that is EAT. That's probably where I'd be looking, or possibly Shake Shack, SHAK. That's the symbol of that one. I would not. I would probably watch list Starbucks, but I would not be a buyer just based on the fact that it's just not time for it yet. And with this whole COVID thing, it's been difficult. All right, let's look at Alibaba now. Here's the problem with Here's the problem with many of the Chinese stocks, and you're going to see. Unfortunately, this is going to be increasingly, I think, a factor, and that is that the Chinese government is starting to clamp down on Alibaba. Matter of fact, Jack Ma is having some issues, and it's affecting the stock prices significantly. So there's a lot of political risk when it comes to the stocks. That said, Alibaba is a terrific company. And I just wanted to, Gary. So this is a question from Gary saying, "What about Alibaba, and should we buy it now?" Well, I don't think we should, and here's why: because we do have potentially a downward trending chart. It still has a very good checklist, though. 8 out of 9, so that's good. And the fund ownership is stellar, but it is going down. So would I buy it at this point? Probably not. Now, here's the thing: I would buy Alibaba if it pulls back to the 200-day moving average and then reverses on that 200-day. This is one of the best when a stock reverses off of the 200-day. That's one of the best opportunities. I'm going to show you the stock. So typically the way I like to buy stocks, there are several ways I like to buy stocks. One of them is on a proper base. That's a cup with handle, cup, 3-week tight, double bottom, that kind of thing. The second is on a reversal off of one of the trend lines, and the very best one, if you can get it, is when a stock will pull back down to the 200-day. That's this black line here, and then strongly reverse. But that's not the case here with Alibaba. I want to make that clear. We have a situation. We have a major sell-off going on Alibaba, at least right now. Why? Because it's pulled back below the 40-day line, and as you can see, we also have very strong selling volume. Now, it did have excellent earnings, and this is again why I like to preach the rule. Hold it into earnings, sell it, see how it does, see how it pulls through earnings, and then buy it later. So if you had done that with this, you probably would have gotten a heck of a bargain, because it moved up very nicely into earnings, and then the day after earnings, boom, it went right back down through the 21-day, down through the 40-day, and it still hasn't reversed. So is there a buying point on Alibaba right now? I would say no. Wait for this thing to reverse. It may reverse now. It may reverse off the 200-day, but Alibaba is definitely, at this point, not a buy. All right, question on space. This is Virgin Galactic, and of course, this is really one of the only pure play on the space exploration business that you can get. Now, interestingly enough, it is up strongly today. Now, I have had earlier in the year, if you've been following my show. Oh, by the way, I meant to tell you, I am now on Apple Podcasts. So if you would like to listen to my podcast, it's available on Apple Podcasts. So it's I think it's apple.com/podcast. I have to get the URL. I should have had it ready to go today. I was running a little bit behind, but I'm on Apple Podcasts, and I'm also on Google Podcasts, and it's Dallas Trading Floor. That is the name of the show. So anyways, basically we've pulled up nicely off of that 200-day. It pulled below the 200-day, then it's pulled up. Now, where will it go from here? Wow, it's hard to say, but it looks like we have come through earnings. The next earnings are on the 25th of February. So we're out from the earnings. Now, what happened? Well, we basically had no sales, by the way. We had no sales. This is a very peculiar company because, of course, they won't have any sales, actually recognize any revenue until actually somebody goes into space. And that definitely has not happened yet. So this is very speculative in terms of the stock. But no relative. So it's got about 13% funds. Can you buy this thing? Can you buy this? That is the question. 5 out of 9 on the. So I wouldn't do it on that. Now, would I buy this thing? Well, if it pulls back, I think this potentially could pull up to $40 a share, potentially. And it does have, believe it or not, if you're just looking strictly at trends, and that's what I'm doing here, because remember, this is a completely speculative stock. I am actually looking at an upward trend on on Virgin Galactic, if you can believe it. So, if you have a strong constitution, and I really say that, strong constitution, you could possibly buy this off of the 200-day line. And the buy point on Virgin Galactic would be, if that were followed, 1893. So I'm going to put out there, and this is a speculative buy, but SPCE buy point, and I'm going to put 50-day line is equal to $18 and let's see, $18.29. So, are we in the buy zone for this? Are we in the buy zone for this? Well, barely. We probably barely are in the buy zone for Virgin Galactic. Would I buy it? I don't know if I would buy this one right now because the market has changed. It's a little bit more of a challenged market than it was before. So I don't know if I would be a buyer of it right at this moment. But that would be a buy point that you could buy it at. And again, I have owned space before, and it's a cool stock, but it's definitely a speculative stock. So, don't put all your chips in there. Let's look let's look at this one, TSM, and of course, this one I do recommend possibly moving into because I do think this is a strong stock, and I think it's there's a lot of people that have bought this one, and it's got strong support. Now, where is there a buy point on TSM or Taiwan Semi? Let's see if I can give you a buy point. Well, the last buy point on this stock on a flat base was $84. It's currently $90.88. So it is just in the buy range. So it is actually buyable, by the way. At this point, it is actually buyable. So there is a buy point, and I definitely think it's worth your time. TSM, the buy point on this one is equal to $84. Is equal to $84. Now, remember, with a buy point, what you want to do is you want to take that buy point and then you want to multiply it. You want to multiply it times 1.05, and that gives you the buy range. So, I'm fairly confident that if you were to buy in this range from about $84 up to about let's see, $87.74. And we're a little bit beyond that today, so we're above that. We're what they call extended. Then you could go. So wait for it to pull back and try to buy it at the top. You could possibly buy it at the top of the buy at the buy range at about 88.10. So that's where I'm looking at it. The range that TSM is buyable in is from about 84 up to about 88. That's about the range. So there's about a $4 range in there to buy, and I do think it's very, very strong stock. It's got a 100% checklist, by the way. I just want to put this up there, put this out because it's got a 100% checklist, and that's very rare. 100% checklist. It's got increasing fund ownership, and it has a relative strength which is moving upward decisively at 91. So that's excellent. Also on the weekly chart, it's looking very strong. So I would, I think TSM might be a very, very good, very good one. Thanks for that 89 proof. And let's see, we have another question from TikTok. It's from Brunswick 300. That is the handle on TikTok. So let's look at Amazon. Symbol AMZN is the symbol for Amazon. Let's see if we can have, kind of what the deal is on that. It's down. It's pulled back heavily today at 3137.39, which is very expensive. It's down $137.98. So what can we do with that? Well, let's look at the daily chart. Let's see if there's anywhere to buy it. Well, it is, it is pulling back up. It was down and then it's up. So for the week, it's down, but right now it seems to starting to change direction. It came through earnings. It had tremendous earnings. Earnings were up in the quarter, year over year, 102%. So that's pretty excellent. And obviously, Amazon is Amazon. Relative strength of 85. That's excellent. That meets my minimum criteria. I typically like to buy only stocks that have 80 or better on the relative strength, and this definitely meets that category. So let's look at some other things. Funds, of course, are excellent. Yes, of course they are. And the checklist is 8 out of 9, so that's excellent too. The question is, where could you buy this thing? Well, I would be a little, it does look like there's powerful movement to the upside on this. So, I mean, you could buy this below the 40-day moving average, but the closest thing to a buy point on this would be about 31.86. I wouldn't be. Here's the thing: if this is another kind of a rule, and you learn this as you trade, but if you buy something below a buy point, make sure that you set your stop losses very, very tight. I recommend only about 3%. Now, normally, if you buy above a buy point, you want a 7 or 8% stop loss on it. But if you're buying below, and I'm talking about below the buy point, which you sometimes you have to do that, you want to set your stop loss very tight, about 3%, 2.5 to 3% is where you want to set it. So if I were buying Amazon, and I'm not in Amazon right now, I would set I would buy, and I could buy this on upward momentum. I would be very careful. Set my stop loss 3% down on this one. So that's Amazon. All right. So what's happened to Tesla and Apple? They seem to be in range. Yeah, very very slow. Yeah. Well, I think you're right, Christian. This is Christian Singh coming in from YouTube. I do think that they are in a range bound, Apple and Tesla. Tesla is in a period of basing. It's running from about the 407, 408 range on up to about maybe 440, 445. Until it breaks out of that, I don't think you really want to do anything with it. I've been knocked out of it a few times, and I just want to see it move higher. There is a buy point on Tesla at 466, but that's the secondary buy point. And there's a primary buy point at 502. Now the thing about the primary buy point, it's if you're buying below that 502 range, if you buy it, you want to set your stop loss very, very tight at, again, only about 2.5% or 3% below where you where you buy it, because it does have a tendency to snap back. So right now I wouldn't be buying Tesla. Now that may change in a day or two or in a week. You never know. Apple, on the other hand, I think a lot of people, a lot of the larger funds are going to be selling it, and the reason I do believe that is because even though the iPhone sales are going to be great, it's just everybody is in this stock, and I just don't know if it has a lot more room to run up. It's priced to perfection, I think, and so I do think it's going to be pulling back a little bit. The multiple on Apple is very, very high, so I think that that's one of the issues, unfortunately, unfortunately with that. So Cineplex buy point. Boy, Cineplex Odeon, Gary, please don't buy this thing. I don't think you want to be in this sector. This is a very dangerous sector. But let's see if I can give you some. Cineplex Odeon, I don't think you want to be in this sector. AMC, Cineplex, it's just not the place to be. I just think you better be very, very careful. Let's look at ResMed. I'm actually in ResMed, and of course, if you are a sleep apnea sufferer like I am, unfortunately, because I need to go on a diet big time. You do have problems sleeping, and ResMed definitely is good in this area. So, RMD is the symbol for ResMed, and ResMed it's just continuing to do well. I do like the medical device makers a lot because I think that they have a lot of very, very good. It's up $3.72 today at 215. Of course, I don't know if I put it on alert on. It's been on the watch list. Been on my watch list. I basically was a buyer. Let me see where I was a buyer in this one. I have to check to see because I don't remember exactly all my entry points on this. But let's look at the small portfolio because I have it. I have it in there. Let's see where I entered that one, and I just want to give a buy point and that kind of thing on there. So on ResMed, and this is one of the ones that had it. I was actually in at 209. So that, and I'm up about 8% in 8 days. So that's pretty good on there. It was definitely on the list. Retractable, ResMed. There we go. There's ResMed. As you can see on the list, I don't know if you could see this. It's a little bit small on the type here, but it is currently, by the way, and I want to be straightforward about this. Right now, ResMed, in my calculations, is in a buy zone. The buy zone is from, it's basically 209, and then if you multiply that times 1.05, that gives you the buy zone. So right now, ResMed is in a buy zone. So the question is, would you buy it at this level? Let's see if, let's see if it is buyable at this level. Let's look here real quick and see if ResMed is. It definitely is, and as you can see, it's pulled into the it's pulled into that. There's a kind of little blue shading there, and that's the buy zone. Definitely is in there. Now, is it buyable at this level? 8 out of 9. I think it's very buyable. By the way, I think this one is very buyable. I may double down on this one a little bit. Funds are 42%. This is not a spectacular high flyer, but it does have a relative strength of 85. 80, of course, is my minimum to buy. So I typically like this one. I think this one could go, it definitely has shown that it can move, about 224. So I do think this one is probably headed north. So I definitely think you could safely buy ResMed at this level. All right, so I've gone a whole hour here and wasted your time. Just wanted to kind of give you some stuff. If you want to get on my action trade alerts, super easy to do. Just go to www.dallastradingfloor.com, and if you're looking on TikTok, super easy to do. All you have to do is click the my profile and then hit that link, and it'll take you right to the site where you can sign up for the action trade alerts and the link to the small portfolio. And I do keep a watch list with the buy points on there, and of course it's all free and easy to go. And I am, as I said, I'm very excited with this news. I'm going to be on Apple Podcasts and on Google Podcasts. So Dallas Trading Floor on those two things. So until tomorrow, just wanted to say to everyone, thanks for stopping by. Please tell your friends. please tell your friends about about us, and hopefully we will see you soon. So so happy trading. All right, and I will see you tomorrow at 2:30 Central.